Welcome to the Coffee Talk Podcast. This is intended for informational purposes only and not to be used as a primary basis for investment decisions. Consult your financial professional before making investment decisions. Shannon Ross is a registered representative and MBA of Lighthouse Financial. Lighthouse Financial offers securities and advisory services through Cambridge Investment Research Advisories Incorporated, member FINRA and SIPC. Shannon is CEO and managing financial partner of Lighthouse Financial. Cambridge and Lighthouse Financial are not affiliated. And now, here's your host, Shannon Ross.
Well, welcome, Coffee Talk land world audience. Welcome.
Good morning.
We were out for a week, so it feels like it's been
forever.
longer than that. We were snowed out last week, so we couldn't make it to the studio. I was very sad.
I know.
So
I missed it.
we had even kids off for school for 2 days in a row, which I can't even remember the last time.
I know.
So many of you know, we record this show out of Colorado Springs, and we got bombarded. And a lot of the country did, because obviously it swept us and kind of went through south and up onto the northeast. So
I'm glad
we're back. It's sunny. It's
somewhat melted.
again. Yes.
I mean, where I'm at, I feel like it's
the roads
taking
have
forever.
recovered.
That's
So,
true.
I grew up on the East Coast, so the treatment of snow was so different. Like, there's actually plows that are working 24/7 and salt on the roads so that the conditions are so much better.
They don't do that here.
Colorado's approach, for those of you who might not know, they really do rely on pretty much the sun. So there will be days and days. Yes, there are snow plows, but they don't use salt.
them.
So they use some kind of gravel that doesn't work at all.
No.
And so, yes, you're left with like 4 or 5 days of treacherous driving.
At least
after
on
a
the east,
blizzard.
on this part of the state.
Yeah.
On the western side, I felt like they did better when I used to live over there.
I've never lived over
Yep,
there.
they used to put mag chloride on the road. I'm sure there's something bad about that, but when
Yeah.
you're driving it, that mag chloride is awesome. We have snow plows. They don't show up to my neighborhood for
You don't get
while.
anything. I know. You have your own
We're the
snowplow.
stepchildren. Nobody comes to our neighborhood.
You're like right in the county line edge.
They drive
so.
right past and we're like, nah. Where we were at, I think we have like this community. We all have our ATVs with the plows on the front. And I think they literally depend on that.
Yeah.
They're like, we know those people. They can plow their own stuff.
That are in my neighborhood that no one knows anything about anything. We still use a good old snow shovel. We still
You've got to get a snow blower.
We
Now
haven't
that
bought a snow blower.
plus the plow is amazing.
So,
How have you been?
I'm good. I'm excited for the Olympics. The Olympics have. This is why she's dressed this way. I mentioned the Olympics
Just
in
so-
our prep time yesterday, but did not know that you would show up. So,
Team USA.
Team USA.
Had to move the hair out of the way.
What's your
Well, I
what are your
thought
favorite
she
events?
would show up.
Well, I asked you a question
Ryan
about
has
the
on
Olympics.
red, white,
I
and
didn't
blue.
really think this would be a red, white, and blue theme. Although I do have, you know this, I do have my fair share of red, white, and blue gear, so much so that my kids make fun of me because I buy flip-flops, boots.
You just bought a pair of
I
boots.
know. See, so
I thought we had a theme
maybe
today.
I'll do this
So
at the closing ceremony.
I look ridiculous, but you know what?
You look
I am
cute.
supporting the cause. Go
There you
Team
go.
USA.
What are your favorite events to watch? Or to
We
cheer
had a
for?
conversation before this started, so that's why I'm chuckling. So figure skating, historically, figure skating is my absolute favorite.
Men
to
and
watch.
women?
Yes, both.
It is fun.
Team,
That's my favorite.
singles, whatever, is it solo, whatever. I don't know,
Yeah.
but which I've heard.
Now
isn't
there's
going
like
so
ice
great.
dancing, which is a little
Not a fan.
different, so
Not a fan
that's
of ice
little,
dancing. I want to see like all the tricks and flips, and I feel like ice dancing is more.
One of the U.S. Olympic ice dancers is from our zip code in Colorado Springs.
Yours or mine? Oh,
Brandon.
we're in the same.
Brandon something. I don't know. his
Brandon
last name.
something.
Well, we live in the same zip code. I don't know if you know that or not, but we do. But he does. He lives in that zip code. So go, Brandon.
Oh, go Brandon, whoever you
Yeah,
are.
that's
Go.
right.
We're Team Brandon, Team USA. Go
If
us.
you had to compete in an Olympic winter event, which one would it be?
figure skating.
Oh, okay.
Oh,
so it's
yeah.
your favorite to watch. And,
I don't
and
know.
That's where you would hope.
Curling
to be.
is up there.
I don't really understand. That's the one that no one understands why. Why is it an Olympic sport? But I hear it's fun for those who love it.
I don't know why it's an Olympic sport, but that takes some strategy and skill because you're like getting at that thing and then you gotta like slow it down and then you gotta get it some more. I mean, think of how tired their arms get.
Yeah.
I'm
Hey,
impressed.
Teach their own.
And they're standing on the ice.
Sure.
I applaud you.
Anything on ice.
Go curling teams.
As we know, I mean, ice. Even just getting into work on an icy driveway is
I have a
just,
bone
you
to
know.
pick with our property management company. It's 3 feet of ice. We'll get to that later.
Yeah,
That's all right.
you
We'll all
know.
just skate into work.
I know. Winter.
I know.
It's okay.
There's no heels at
Yeah.
work lately.
I think, not that you asked me, but my favorite Olympic event.
I didn't get there yet. Wait, Shannon, I have a
okay,
question.
Yes.
If you could compete in any Olympic sport, what would that be?
I would like, I don't think I would ever have the bravery to do it, but like the whole Super G downhill skiing
Oh.
when you're going, 100 miles an
bajillion
hour.
miles an hour?
and- yeah.
Did you see who was
Or
it
the
that
free ski jumps, which is new this year, are amazing. I've gotten so much pleasure watching
I'm
that.
not on. What's
So
the
you'll
free
have
ski
to tune
jump?
in for
Yeah,
that.
I've missed
So
that.
it's the big, the downhill, but then they're on 2 skis. Some use poles, some don't, but it's a freestyle. So they do all these flips and turns and crazy things.
How do
And
they-
then they land like backwards, which I'm like, I don't know how they do this.
How do they even know
but
where to
it's
go when they're in the
amazing.
air?
I know.
Like, how do you?
It's incredible.
Yeah. Well,
So-
somebody got really hurt on one of the downward. She was a female. I think she was
Mm-hmm.
USA, wasn't she? Like at the very end, something happened with her leg, and it didn't look right when, like the ankle.
Yeah, well, I mean, it is very dangerous.
They had to take her off on a big
Yeah.
bag-looking
I
thing.
think I actually like the Winter Olympics more than the Summer Olympics, which I know most people don't. But
I loved
don't
the
know.
gymnastics in the summer.
yeah,
Summer Olympics.
yeah,
They're
but
really
yeah.
fun.
So it's
Anyways.
been good. It's been fun.
All right,
It's
go
been
Team
a little
USA.
low key, just because of certain things going on and where it is and all of those things. But go
there's-
Team USA.
I heard from our producer Ryan that not as many people are tuning in this year
Yeah, I've
as
heard
they
that
have
as
in the
well.
past. And apparently, another fun factoid that Ryan told us is that summer is significantly more popular than the Winter Olympics.
Heard that. Interesting.
He educates
well, hey.
us.
Hey, well, thanks for tuning
Yeah.
in today. We're starting a new series. We just finished up our big business series, which
Mm-hmm.
we got some great feedback on. So if you didn't listen to it, go back, because if you're thinking of starting your own side hustle or a second business or going out for a dream business to
Yeah.
own, it has some good tips there.
Yeah.
And so today we're going to start something new for the next couple weeks. Obviously, this is a finance show, and so we do tackle financial topics.
Yes.
So because of different conversations I have with various clients, I thought it was pertinent to talk about a bear market in the next couple shows, just because of the timing of certain things.
Yep.
The year 2021 started or finished so strong. I think the S&P had over 50 new highs throughout 2021. It had a banner year, finished, the S&P finished over 26% in terms of performance. And so it was literally December 31st was our last steady day. So all of January, the market's been kind of all over the place. In February now, it's starting to stabilize a little bit, but people get a little scared when they see volatility in the market, the ups and downs. And so they get very uncomfortable very quickly.
Yes.
And then we all get spoiled very quickly we all want double digit returns. We all want, the 15, 18, 20 plus % returns. And not every year is going to be like a 2021. And so I wanted to at least spend a couple shows explaining what to kind of watch for. And more importantly, because again, one of our missions of this show is to take fear out of money. And so for those out there, and maybe some of our listeners are some of those that have a lot of their assets in the market, what can they do now to help prepare so that if a sizable correction, and we'll talk about what that is in a moment, but if a sizable correction comes, they don't have to panic. They know what to do. They know how to stay on the bus ride, as we talked a lot last year about.
Don't run.
Yes.
Don't panic.
Don't panic.
That's
Don't
number
get
one.
emotional. Don't
No.
do emotional investing.
No.
Or but
withdrawing.
that's exactly. So that is what we're going to focus on today.
Okay.
And so we had, I think one of our first shows, we talked a little bit about bear and bull markets. Maybe our very first show.
It could have been because
I
I
think
think
it was.
You
We started
defined,
real high level.
Yeah. Real.
So this is, a little bit more detailed than our couple nuggets from January of 2021.
Well, it's come up throughout the
It has.
show
Yeah.
over time.
Oh, it has.
Yeah.
It has.
But not in this not in the in-depth level that we're going to go in the next
Yeah.
couple shows.
Yeah.
Yeah.
And so, bull markets are less defined. We've been in a bull market all of 2021. We've been in a bull market since 2009, really, which means stocks have been going up and up and up. People have confidence. People love stocks. They're putting more money into the stock market. They're getting very used to good returns. And so it's hard to remind people, and even when I sit down with my own clients who they've been so used to just calm waters and double-digit returns and rewards and all of these kind of things, that you have to remind everyone that the 20-year historical average of the stock market performance is 7%. So when people are used to 15 plus, cutting that in half, it's not a failure.
Sure.
It's something that happens and is the historical average. The 10-year average is 9% just because of what the last 10 years have done in a bull market. But to kind of get people readjusted, that the average over the last 20 years is 7%. So for those of you who are looking at your statements right now, that a lot of them are hitting our mailboxes for the 2021 review, you have a buffer going into 2022. You have that cushion of what you've been able to make on top of your money. And that's great because that's going to be needed. That little bit of cushion is going to be needed in 22. A lot of the analysts and the reports that we see weekly, that we study, because that's our job, is that 22 still shows potential for being strong, but probably not quite as strong as 21 because there's things looming out there. We all know inflation is off the charts, which creates, the Fed has to do something about it. Yeah. They're going to meet in March. All the experts are predicting that they will make some adjustments slowly to the interest rate environment. So we'll see interest rates go up. And the other thing I think people don't really understand is how much money the government put into the stock market in 2020 and 2021. What that means is the government is holding a lot of assets that they can't afford to hold on to long term, especially with the national debt. So they will start to sell off those assets, which then again affects the market.
Right.
So there's a couple different factors that I do believe that a correction is on the horizon. No one knows how much. I mean, no one ever does. Obviously, we're going to focus this show on kind of preparing you of like what a bear market is, what are some things to get ready for, and then our next show will go into the 8 things you can do about it.
Right.
Because it's not something fear. Bear markets are normal.
Well, they're normal.
And they're part of the cycle.
Right.
They're part of this beast that we call the market. And, we know clients that there are some clients I have that absolutely love the market. They love to be risky because they understand that the ride's going to be, ups and downs. They know what their goals are. We've worked on their plan, what have you. It's those that are in the market that really shouldn't be, that are horribly fearful and just panicked with any kind of correction out there. And markets even bull markets have between 3 and 4 or 5% corrections in a given year, usually 10% correction. And so it's just it's part of the characteristic of participating. And so,
risk is the name of the game. At some level, you're willing to risk if you're going to be in the market.
Absolutely.
Well, and in the past shows, we've talked about, and I know we're not going to get into this today, but we have talked about risk tolerance. We've had a show specific to that where you talked about.
I had you take a risk tolerance assessment.
You didn't have me take a risk tolerance
I think you
assessment.
came back at 41.
If you and your advisor in your conversations, a good advisor would have already prepared you, and part of your strategizing would have been to prepare for what does a downturn look like, and what can we do within your own portfolio to prepare and protect from that. So this shouldn't. A correction's always going to come. This shouldn't blow anybody
backwards. But it always
backwards.
does. Like there's something so fundamentally psychological.
Well,
and I get it
contagious.
because no one wants to lose money.
No.
You know what I mean? Like no one wants to see a negative ever. And I totally get that.
Yeah. But you stand to also, you could, because these are long-term strategies, right? They're not a flash in the pan.
Yes.
So there is an opportunity in the bear market to make money.
That's right. And we're going to talk a lot about that as well. So if you psychologically can get your mind around, which I think is the biggest hurdle here, psychologically get your mind around what to do and see it as an opportunity instead of panicking that you're just watching. Most of these performance reports I see today not only show you your return percentages, but also show you year to date how much you've lost in a dollar amount. That's usually messes with people because, hey, they might have a couple million, but if they see that they've lost $150,000, between the first of the year today, that doesn't sit well. That doesn't feel good.
Right.
And so you have to kind of work your mind out to realize that, okay, when things are going down, what do I do to make that into an opportunity and to not panic? And because this is a long-term play, like you said, if you need money, if you need the cash within 5 years, don't put it in the market.
Yeah.
Because it is so risky that you might lose it. So if you're saving up to buy a car, to buy a house, what have you, make sure that you're not counting on that cash and have it in some kind of equities-based account where it is completely at risk to be gone or to be absorbed or significantly reduced if there is a sizable correction. So, again,
well, and what is a bear market? Like, what is a sizable correction?
So let's go there. So bull markets aren't really as defined as a bear market. A bear market, because everyone's like, oh, whatever. I don't know, it's going up. I love it. We love it. But in opposite, a bear market is a 20% or more reduction for 2 consistent months. So what's interesting is, even when you look at the historical trends of where bear markets have come, some people even call that V-shaped recovery we had in 2020 from March until June a bear market, because it was a little bit over 2 months where everything tanked because of COVID and then it shot right back up. Right. To me, that doesn't really, I don't really look at that as much as a bear market, because bear markets tend to be more a couple years, 18 months, the biggest bear market our country has ever seen was in 1929. And to recover from that bear market where people lost at least 50% of their fortunes and that Great Depression started and it didn't recover. They didn't recover their losses until 25 years later in 1954. So, that's not usually what we predict to ever see again.
Right.
No one has a crystal ball, but right now, like the last one was 2008 with the bear market coming for I think it was 20 months that, when it was able to recover out of that. But still, after those losses, it took at least 3 years to recover what people lost from that bear market. And most recent one. I
was reading up, because I think what you brought up just then, I think there is, not that a lot of us were alive in 1929, but because historically we've known, if people are in the stock market, they know the trends of the stock market. I think that's where a lot of that anxiety can come from, because recession, we were just talking about this before the show started, a recession and a bear market are not synonymous. They're used interchangeably a lot, but they're not. So I think people hear a bear market, fear starts, right? Fear is contagious. We've learned that over the past few years.
Absolutely.
Fear is contagious. It causes anxiety. And people think that this is going to lead into another recession or a Great Depression. Right. And historically, although 1929 is different, historically, if education is the antidote, right? Like if you are having anxiety, it's important to research historically the trends of the stock market. And most of the predecessors of the bear market are going to look very similar. Chances are, if you're in this for the long haul, things are going to correct and you're going to rebound. Like you said, though, unless you're needing something in 5 years, that could be different. But this one article I was reading, the guy his first thing he talked about in a bear market is don't do anything. Like, just stop for a minute. Like, before you jump on the train of anxiety and fear. And he recommended, educate yourself. Yeah. Maybe you're new to the market and you've never educated yourself on market trends. Do that, because that can make you feel better if you look at historically the way these things have gone.
Absolutely.
And it'll always bounce back.
Yeah. Or go find an advisor. I mean, in a bull market, it's less, critical just because everything's going up. So, you'd have to really try to not participate in some kind of gain. Yeah. But when waters get dicey, that's really when you need the experts that have even more education to know where to put you, to know how to size up your risk tolerance, to know what's good for you. And it's really, I think what's so interesting to me now is because the boomers who are retiring now grew up from parents who had suffered through the Great Depression. Yeah, right. So for me, I see a lot of boomers who, as investors, they want to hoard as much as they can because of the environment they grew up in. Right. And those that don't have an active plan, they don't know what they're trying to hit. What is the goal? I just want more. Right. Because they have that more approach of I just want more so that I don't have to go through what my parents went through. Right. And so each generation, and we're going to talk about this, I think, on an upcoming show that we're working on, but it's so interesting to me to watch generations act so differently in terms of investing. So you have the boomers, you have the Gen X's, you have the Gen Z's, you have the millennials. And they spend money very differently. They invest differently. But the boomers right now who are getting ready to retire or in retirement, the majority of what might correct and what they need to know is really important, because it's one thing when you have 20, 25 more years to participate in these ups and downs, and it all levels out over time typically. But when you are already in retirement, that's when you have to be even more careful, because you can't afford to lose 40% of your assets. That's what we saw a lot of people go through in 2007, 2008.
Right.
Let's remind, 2008, I know, the subprime mortgage crisis is really what propelled. There's a great movie. I think it's the most documentary kind of movie of that. It's called The Big Short. It has like Brad Pitt in it.
I love that movie because it's so good. Ryan likes it too.
If you don't know what happened 2008, or if you like Kelly wasn't like walking by then, you should watch that movie because it is an important documentary. It's not a documentary. It's actually, has some great actors in it and great directing.
It's a great drama. Yeah, it's
but
good.
It is very honest and authentic of what our country did and how that happened. Yeah. And I can remember, because, my husband and I we've always been in real estate. We were, flipping houses at the time, and we were in Phoenix, one of the hardest places. Phoenix and Vegas were probably one of the top 2 markets hit most by the housing crisis. And we bought a house that lost half its value within 18 months.
Ouch.
And that was a hard one to swallow because, so we lived real time through it. And it took 10 years for that house to recover. We didn't own it at the time. We had to make some moves to get rid of it. But it's our greatest financial loss was that investment. Because no one predicted that, no one like in this room or in, normal life predicted something like that happening. I think obviously a lot of Wall Street.
But when you watch that movie,
Christian Bale knew the whole time.
He knew the whole time.
And what's crazy is that character who represents a real person continuously invests in water rights now, which I find so interesting.
Should we all be doing what he does?
We should. And I was actually reading a report a couple weeks ago, because I love Phoenix. I've spent over a decade living there, that in 30 years, they don't even think people will be able to live there in the summer because it'll be so hot. And they'll start to run out of water. I was like, oh my gosh.
That's kind of depressing.
I know.
Wah, wah, wah. Anybody listening from Phoenix? We're sorry.
Get a winter place now, just in case.
They don't like you anymore, Shannon.
But it's good to, okay, so we define what a bear market is. Now, what causes bear markets? Like, why do they even have to happen? And so there's a couple things that we've seen historically that have caused bear markets in the past, and it's usually prevailed with people getting laid off. You see higher unemployment rates coming up, losing jobs. People start hoarding money, not spending a lot. They start to be fearful or more anxious. They become more risk averse. A lot of that starts to feed into a bear market. And then obviously some of the main things is events out of our control. The reason why we saw those 2 months of a bear market in 2020 was because of COVID. So there's some sort of natural disaster or a war or a pandemic that's throws everything off for a period of time, and it could affect the stock market and the economy. What's so interesting about the pandemic, though, and it would have stayed in that bear market status if the worldwide governments did not respond the way that they did. Yeah. They started influxing cash across the globe, and obviously led by the U.S., which is, we're the global player of what we
Team USA.
Yeah, Team USA in economics, which is why we have so much debt now. But infused so much with the rescue packages and stimulus packages that, yes, it prevented a long-term bear market, but that still is going to have to be rectified.
I was about to say, did it?
It prevented chaos, I think, in the short term, but I think in the long term, it when you listen to, I was at a seminar a few weeks ago with the lead dean of economics at CU Boulder in the Leeds Business School, and seeing those kind of academics very concerned makes me concerned, because they know all of the little levers and the signs and the things that most of us don't know to look at.
Yeah.
And regarding the national debt being the biggest ticking time bomb as well, that we just keep adding to, and the asset sheet now of the government, it is concerning.
Sure.
And it does, I think, take more planning on our side as, kind of end users of the economy to make sure that we are preparing. We don't want to, be negative or doomsday or what have you.
But don't panic.
But you have to be prepared. And that way you don't have to panic.
Use wisdom.
So, because you don't want to be in a situation where you keep taking excessive risks, and one of these days, one of those risks are going to just take you out. And so I even have a lot of clients who will come to me from other advisors, and they're in their 70s and they're still, investing in 80-90% equities and still needing that for income. And I'm like, oh, no. Like, it's not time for the Ferrari anymore. It's time to downgrade, to the Cadillac that's smooth and predictable
and reliable.
And reliable, because you are at a point where you don't have time on your side to make up a 30-40% loss.
Sure.
And so that's the absolute first conversation of when a bear market, even before a bear market comes, when we start seeing these little corrections here and there, right now, company valuations, earning reports are still solid. That's really the backbone. But that's something to look at. We will see more volatility in 22 than we did in 21. So what we're going to spend time in next show is what to do about it. Not to scare you, but what are some things, no matter your age, and we'll talk a little bit more about, hey, if you're a younger investor, here are some things you can think about. Even if you're an older investor, how to turn that bear market or a corrected, even if it's a window of correction in the market, how can you continue to make that work to your advantage? Because none of us can market time. People try it. Experts try it.
Right.
It is so rare for it to work that it's not as much of the other side that you often hear is set it and forget it. It's not as much that either, because you have to make sure, like, are you in line with your risk tolerance?
Sure.
Is your portfolio rebalancing every 6 months or so?
Sure.
If you only want to have 60% of your wealth in equities, you need to rebalance every 6 months, because it just kind of, time continues on the continuum. And based on what the market has done in that 6 months, you might need to rebalance to get back to the risk level you really, truly want to be at.
Well,
so we'll
and I
talk through
think
that as
another
well.
thing, and I know we'll probably talk about this more next week, I think it's important that in a bear market, now is your time to reassess that risk tolerance. Do you need to shift some of your needs around? Have you pushed it to a limit that you're actually not comfortable with, and you need to strategize to pull things back? But I know we'll talk about more in the next show.
Absolutely.
But
And to
now's
do
the
it
time.
before even it hits, because, it's those conversations. Okay, are you comfortable losing 10%? Most people are, because that's a pretty normal thing. It goes up and down as it will. Are you willing to lose half? Are you willing to use 40%? Because if there's a sizable correction, that's where you're sitting right now.
Right.
And no one likes that bus ride.
Right.
Especially.
Are you willing to lose that and have to sit on that loss until it corrects to where you get your money back? Most people with
Exactly.
that
And when
significant
we
loss
saw
won't
in
do it.
2008, we saw so many retirees having to return to the job market because they had to wait time for those assets to grow back again, for them to go back into
retirement. I remember how hard hit my parents were. In their 401ks.
It was devastating.
It was devastating. I remember that. Yeah.
So how do we avoid it as much as possible? What are some things that we can do now before anything like that starts to peak or show its ugly head?
Yeah.
And so we will focus that next time. And so before we go, what do you think is going to be your hashtag this week?
I don't pick that. This one picks the hashtags. What is it?
No, you guys already picked a good one. Prepare for the bear.
Prepare for the bear.
Is that
What are you
too
going
long?
to do?
Or hashtag Christian Bale was right.
Hashtag The Big Short.
Which is everybody's homework. I'm going to
Watch
rewatch
it,
it.
yes.
Kelly, you
We
have to
own
watch.
it, which is
It is my
funny.
favorite movie of all time.
It's seriously
Yay.
one of the
It is
best
so good.
movies
It
ever.
is so good.
I
So
agree.
don't watch it with kids in the room, because I do remember some scenes in there. I think it is
Yeah,
R.
don't do that.
So,
I'm like, I don't remember.
so just the,
those scenes.
caveat.
Okay.
But and where can people find us if they want to find out more?
Well, website, copytalkpodcast.com. Instagram, Ryan gave us our hashtags. DM us. We'd love to hear from you. We appreciate our community and all the listeners and subscribers. Keep sharing.
Absolutely.
Because that's how it gets
and
the
if
word
you're
out.
concerned that your portfolio isn't where it needs to be and you want some extra help on that, our firm can do that. Lighthouse Financial.
Yep.
Just come to the copytalkpodcast.com website, hit contact us, and myself and my staff will be able to help you if you don't have anyone in your
those will
local
not go into the black
hometown.
abyss.
So,
You really will be contacted by someone.
absolutely. So
and
we're
then,
always
of course,
here to help.
YouTube, our favorite one.
Tube. That's right.
YouTube.
Back at it.
That's
a
right.
week off. So
I know.
hope people didn't forget about us. I'm sure they didn't.
I hope not. Thanks,
And
everybody.
Tune in. Look at April's Go Team USA.
Whatever.
We'll see you next week, everyone.
This is intended for informational purposes only and not to be used as a primary basis for investment decisions. Consult your financial professional before making investment decisions. Shannon Ross is a registered representative and MBA of Lighthouse Financial. Lighthouse Financial offers securities and advisory services through Cambridge Investment Research Advisories Incorporated, member FINRA and SIPC. Shannon is CEO and managing financial partner of Lighthouse Financial. Cambridge and Lighthouse Financial are not affiliated.